It is 8:16 a.m. Pacific Standard Time. It is the 28th day of January 2026. This is episode 1245 of Bitcoin and Steak and Shake. Gonna start us out today on all the news you can use with me, your host, David Bennett, here on the Bitcoin and Podcast. Then we're going to move over to South Dakota because, yes, all of the states seem to be reintroducing Bitcoin bills. And a lot of U.S. merchants are now accepting, and I hate to say the word, crypto. In fact, it's quite a high percentage of them accepting crypto. Then we're going to talk a little bit about Peter Thiel and Galaxy-backed Citria. They want to do something with idle Bitcoin and bank accounts. And then ending the first half of the show, we're going to talk about Strive clearing all similar debt. And if you don't know who either of those are, you will by the time I read that particular article. Then in the second half of the show, we're going to talk about Pinterest slashing workforce because of AI. Yeah, I know, AI. And then the government in the United States is investigating a fairly large crypto theft by a federal contractor's son. We'll see how that one goes. And then, have you ever heard of a company called DDC? Neither had I. It's an Asian food company of some kind, and they seem to be buying quite a bit of Bitcoin. All right, so Steak and Shake is first up today. They've added $5 million in Bitcoin exposure, deepening their Bitcoin commitment. Micah Zimmerman has this one from Bitcoin Magazine. Steak and Shake has increased its Bitcoin exposure by an additional $5 million in notional value, continuing what the company calls its ongoing burger to Bitcoin transformation. In a post on X, the restaurant chain said all Bitcoin-denominated sales continue to flow into its strategic Bitcoin reserve, which it describes as a self-sustaining system designed to boost restaurant performance while expanding its Bitcoin holdings. Quote, our self-sustaining system, improving food quality that grows same-store sales that then grow the strategic Bitcoin reserve, is transforming the chain via financial technology, the company wrote. The latest increase follows a $10 million BTC exposure expansion announced just earlier this month, marking the second treasury-related move by the company in January alone. Steak and Shake began accepting Bitcoin payments across all U.S. locations back in May of 2025, using the Lightning Network, positioning the rollout as both a cost-cutting measure and a way to attract younger crypto-native customers. The company previously said it saves roughly 50% on processing fees when customers pay with Bitcoin instead of traditional card networks. And according to the company, same-store sales rose more than 10% in the second quarter of 2025 following the BTC payments rollout, a performance it is partially attributed to engagement from the Bitcoin community. Beyond payments and treasury strategy, Steak and Shake has expanded its Bitcoin integration to employee compensation, and they get into that a little bit, but we won't talk about it because I've already told you about it sometime. I think it was Monday or last Friday or something like that. But the chain has leaned into BTC themed marketing. They launched a BTC steak burger offering BTC rewards tied to menu items and publicly distancing itself from adding alternative cryptocurrencies after backlash from BTC supporters. Last fall, the company ran a poll on X over the weekend asking its 468,000 followers whether it should expand its crypto options to include Ethereum, and everybody said no. And I've already told you about that one as well. So there was a comment made that I read yesterday. It was either yesterday or the day before. I think it was yesterday. About the last Steak and Shake story that I read. And it was basically, how do we hook up the Beef Initiative, Texas Slim, and Steak and Shake together to where we get some really high quality beef flowing into the supply chain of Steak and Shake. And I have not forgotten about that comment. I really do think that this is a discussion worthy of having. Calling up the chief operating officer and the chief marketing officer of Steak and Shake and see if they'd be willing to just have a phone call about it. And, you never know. I mean, I've done that shit before. I may just get a wild hair up my ass and call these guys myself and just see if they'll talk to me. And if they do, see if I can hook them up with a beef initiative, because honestly, that'd be freaking radical, man. That would piss JBS meat packers off immensely. I guarantee it. If a major chain like Steak and Shake said, you know what? We're going to use United States ranchers as our supply chain. Now, how much does that increase the cost of the burger? Well, it will increase the cost of the burger, and that may not be good for Steak and Shake, but you never know until you start having these discussions and letting the people with calculators actually pencil shit out. You never know. I mean, the marketing alone may actually make up for any losses on people who just don't want to pay that much money for a burger and start going back to McDonald's or something, but we'll have to see. And it's going to be after we talk about South Dakota lawmaker reviving Bitcoin reserve push with a new bill. Timmy Shin is writing this one for theblock.co. A South Dakota lawmaker has introduced a bill that seeks to allow the state to invest a portion of its public funds into Bitcoin. Not crypto, but Bitcoin. At least that's the way the block is writing it. They're reviving efforts that failed to materialize in the state legislature last year. Republican Representative Logan Manhart introduced House Bill 1155 on Tuesday, aiming to amend South Dakota's public investment statutes to permit the State Investment Council to allocate up to 10% of eligible state funds into Bitcoin, and this would allow exposure through direct holdings, qualified custodians, or regulated exchange-traded products. Quote, I am proud to say I have released my bill that would allow the state of South Dakota to invest in Bitcoin, Manhart wrote on X. Quote, strong money, strong state. The bill also lays out custody and security requirements for state Bitcoin holdings, including exclusive private key control, encrypted hardware storage, geographically distributed secure facilities, multi-party governance controls, and regular security audits. The House Bill 1155 has been read for the first time and referred to the Committee on Commerce and Energy, according to the official journal log of the legislative session. This is the second try, so the latest proposal closely mirrors House Bill 1202, which Manhart again introduced during the 2025 legislative session, and that bill sought to add Bitcoin to the list of permissible state investments, but was effectively killed after being deferred to the legislature's 41st day beyond South Dakota's 40-day session limit. Oh, man, dude, talk about that's kind of insulting right there, man. Well, the renewed effort in South Dakota comes as more U.S. states explore the idea of strategic Bitcoin reserves, because lawmakers in Kansas and Florida have advanced similar proposals, and to date, Arizona, Texas, and New Hampshire have actually passed crypto reserve legislation. Meanwhile, the U.S. federal government established a strategic Bitcoin reserve last year because of Orange Man and, the guy, the Don, the Trumpster, which honestly has just gone nowhere. This is now my opinion. That's the end of the article. The strategic Bitcoin reserve of the United States right now, in my opinion, is a fucking joke. It's just a joke. Even if you go, well, it is filled with stolen Bitcoin and that's not a joke. Well, no, I kind of agree with that. I do. However, until at such time, the United States figures out that they're either going to or not going to actually purchase Bitcoin, not take stolen Bitcoin, but actually purchase Bitcoin in the way that executive order actually states, where they can't just, they got to do it in a budget neutral way. Well, you can do that. You can do that in a budget neutral way without stealing other people's Bitcoin. But until they figure that out and actually execute on that, I'm considering the United States Strategic Bitcoin Reserve as a complete and total joke. And it's really too bad, too. But let's go on with today's news, because 39% of United States merchants now accept crypto, according to a PayPal survey, that is. Micah Zimmerman, writing for Bitcoin Magazine. Oh, God, I hate it. Crypto is no longer niche bar talk. It has become part of mainstream commerce in the United States. A new survey conducted jointly by the National Cryptocurrency Association and PayPal reveals that nearly 4 in 10 U.S. merchants, approximately 39%, now accept digital assets at checkout, with overwhelming consensus that crypto payments will become a standard option within the next 5 years. The survey, which polled 619 payment decision makers across retail, e-commerce, hospitality, luxury goods, and digital gaming sectors, highlights customer demand as the primary driver for adoption. So it's the customers that want it. They're not just like throwing it up because of Me Too situation. Their customers are going, hey, I want to pay in crypto. Well, nearly 9 in 10 merchants, or 88%, report receiving inquiries from customers about paying with cryptocurrency, and more than 2/3, 69%, say customers request these payments at least once a month. For businesses already accepting digital currencies, crypto is no longer a novelty. It accounts for over a quarter of sales, with roughly 72% of merchants reporting growth in transactions over the past year. Yeah, we just heard about Steak and Shake. Quote, what we're seeing, both in this data and in the conversations with our customers, is that crypto payments are moving beyond experimentation and into everyday commerce, said May Zabina, Vice President and General Manager of Crypto at PayPal. Quote, adoption is being driven by customer demand for faster, more flexible ways to pay, and once businesses start accepting crypto, they see real value. Zebina emphasized that when crypto payments are integrated as seamlessly as traditional cards or online payments, they can become a powerful tool to attract new customers and improve cash flow. Adoption is strongest among larger enterprises. According to the survey, 50% of the companies earning over $500 million annually accept digital assets, compared to only 34% of small businesses and 32% of mid-size firms. The data also shows that younger shoppers are fueling demand, with 77% of millennials and 73% of Gen Z or younger customers expressing interest in using digital assets. Small businesses, in particular, report high engagement from Gen Z, with 82% of inquiries coming from this demographic. Merchants cite several key benefits to accepting digital assets, including faster transaction times, 45% say that, access to new customers, 45% say that, enhanced security, 41%, and greater privacy for buyers, 40%. Industries leading adoption include hospitality and travel, that's 81%, digital goods, gaming, and luxury retail, 76%, as well as retail and e-commerce, 69%, where speed, global reach, and digital native audiences play a significant role. Despite the momentum, simplicity and usability remain barriers to wider adoption. The survey found that 90% of merchants would consider accepting digital assets if the setup were as straightforward as accepting credit cards, and the same percentage said that they would adopt it if the payment experience were as seamless as traditional methods. Quote, interest isn't the problem. Understanding is, said Stu Aldertoy, president of the NCA. Quote, partnerships with trusted platforms like PayPal are crucial to bridge the knowledge gap and demonstrate that crypto can be simple, accessible, and effective for everyday businesses and consumers. So that's the end of the article. But I got to say, use Square if you're a merchant. Screw getting a Visa machine or like your regular credit card point of sale. Just, dude, get Square. That takes care of physical retail. What about online? Well, unless Square has a PayPal like option, and I don't think that they do, then PayPal takes that cake. And I honestly think that we're coming to a time where people are, I think a lot of people, they're not done, but I think it's starting to crawl on their skin that they never go into grocery stores because they order their shit delivered. They don't go into any local retail shops because they're buying everything on Amazon. In the town closest to me, the city center, it's a small town, so you really can't call it downtown. It's not like there's like a lot of buildings, but the businesses here are closing hand over fist. And if I were to actually give you a number, I'd say 25 to 30% of all the retail space has been empty and with a for lease sign hung outside it for well over 2 years. 3 businesses, one of which does a banger job on the weekends, they are set to close like at the end of this month or the end of next month. So it's just gets worse and worse and worse. And the reason in Washington State, it's a twofold problem. One is people aren't going to their local retail shops. They're not physically going to the shop, which means that they aren't physically receiving interactions with their fellow human beings. And I think that that's starting to weigh on people a lot more than anybody really thinks. But second, the state of Washington is the worst place in the world for any small business to try to do business. The taxes are way high, and everybody's screaming about living wage. And I get that. I mean, I'm not non-sympathetic to that. I'm just saying that, yeah, I would love to pay a living wage, but you actually have to come buy my shit for me to make enough money for me to be able to pay a living wage. It's not like money grows on trees. And the people here are like, well, why are you closing? Well, I can't pay the people what the state of Washington mandate for minimum wage. Oh, you're a capitalist. You're evil. It's like, no, that's not the problem. The problem ends up becoming, you guys are not buying in the movie theater. The town's only, the closest town to me, the only movie theater closed. There's no movie theater in that town. None. You have to actually drive to another town to go watch a movie in a theater. That is one of the saddest things that I've ever seen in my life. And the reason they gave is we can't afford the property taxes on the building, along with the mandated minimum wage price, along with, and there's like a whole host of shit. Business tax, all kinds of stuff was mentioned. But everybody latched on to, oh, you just don't want to pay somebody a living wage. And these people actually do. They would love to be able to pay their employees a living wage. They can't do it because everybody's giving Jeff Bezos their money. So what happens? You don't have any money. You can't pay anybody. You close down. It is as simple as that. So I hope that my gut feeling is right. I do hope that very, very, very soon, people will start going back to their local retail shops and doing their shopping there instead of buying Jeff Bezos his 15th yacht or however many yachts that this guy has. He doesn't need any more money. I think Jeff Bezos is fine. Yeah, is it? And I do understand. It's like, yeah, but the convenience, I can't get the stuff that I want, from my local shops. Well, how would you know if you don't go into your local shops? Maybe you'll find something else. I'm just saying, give it a shot. Like next time you want to buy something, say, well, let me look around my own town and see if there's somebody who actually sells something like that. And then you can go over to Oshi at oshigood.us, oshigood.us. He's out of stock of everything. But I want you to actually consider looking at oshigood.us, because now it looks like he's got chocolate huddle butter. It looks to me like he's worked out a deal with one of the other Circle P vendors, Bitcoin Beans, the makers of fine chocolate, right? Looks like they've made a deal. So here's the ingredients in the chocolate huddle butter. 100% cacao from Colombia, courtesy of Bitcoin Beans. 85% dark chocolate from Costa Rica, from Finca Yabisi. Ghee butter from Virginia, and that's from Great Ghee. That's another Circle P vendor. I love this. And vanilla paste from Kid Warp Vanilla Beans, who is not in the Circle P yet, but I'm going to be putting him in because this guy, he keeps posting pictures of him making all kinds of like vanilla liquor, vanilla paste, all kinds of neat stuff. And he's paired all of that with his standard huddle butter recipe of hazelnuts, organic maple sugar, and salt flakes. I mean, this stuff looks freaking amazing, honestly, because it's like, I mean, think about it. Hazelnut butter, 100% cacao, organic maple sugar, 85% dark chocolate, ghee butter, and vanilla paste, and sea salt flakes. There was like three, like my Circle P vendor, Oshi at oshigood.us, is actually in business with two of the other Circle P vendors. I love this. I am so in love with this. It's not even funny. The problem is that he's out of it. He's sold out. The only way that you're going to be able to get Oshi to give you some is to try to order it, even if it's out of stock, or email them or get in touch with them and say, hey, get your ass in the kitchen and make some more huddle butter, especially this chocolate huddle butter with Bitcoin Beans, Finca Yabisi, Great Ghee, and Kid Warp Vanilla Beans, all featured in this one beautiful glass jar of chocolate huddle butter. Make sure that you use the code Bitcoin, and you're not going to get a discount, but it will let Oshi know that I am the cause of him being kicked in the pants to get back in the kitchen and make some more of this marvelous looking chocolate huddle butter. And people like Peter Thiel will never be able to taste that because they continue to make Jeff Bezos rich by buying whatever it is they're going to buy off of Amazon. You want to buy it. If you can't walk into a retail shop, shop the Circle P. Go get the huddle butter. But Peter Thiel and Galaxy-backed Citria, which has been in the news because of the whole Bitcoin Core thing, they want to turn idle Bitcoin into a high-speed bank account. What could possibly go wrong? Citria, a Bitcoin-focused application platform backed by Peter Thiel's Founders Fund and Galaxy Ventures, has unveiled its mainnet, opening the door for Bitcoin to be used more directly across lending, trading, and US dollar settlement, according to an announcement yesterday. The debut also includes CTUSD, which is, as you might imagine, a native stablecoin fully backed by short-term US Treasury bills and cash. The token is issued by MoonPay, with Citria positioning it as compliant with the Genius Act framework. The project built CTUSD as a settlement and liquidity layer that can support institutional-grade activity, natively anchored to Bitcoin, rather than relying on intermediaries or wrapped BTC. Citria, which has raised $16.7 million across two funding rounds, is one of numerous Bitcoin-focused projects looking to enable functions on the world's original blockchain rather than just holding Bitcoin and, letting it sit idle in the long term. These firms hope to enable further monetization of investors' Bitcoin, including lending and stablecoin issuance. Prominent examples of such competitors include Layer 2's Botanics and Stacks. Orkun Killick, co-founder and CEO of Chainway Labs, which is building Citria, said the mainnet is designed to bring Bitcoin-secured financial activity on-chain, enabling BTC-backed lending and institutional credit with settlement through CTUSD. Citria said more than 30 Bitcoin native applications are already prepared to serve users across additional financial use cases as platforms increasingly look to expand Bitcoin's role beyond mere passive hodling. Okay. So a system to quote unquote put your Bitcoin to work. Be careful. Be careful with this. This is another way of saying get yield on your Bitcoin. Of course, you always need to ask, where does the yield come from? And in this case, it looks legit, because if you're, loaning your Bitcoin out, you should be able to get some kind of interest rate interest rate on the value of that Bitcoin that you've loaned out. And then that's the yield. And that makes sense. That is yield I can easily understand. But still, it's iffy, because you're kind of turning control of your Bitcoin over to someone else. And every time that happens, your security model on the Bitcoin that your hard fought Bitcoin, it changes. And it does not change for the better. The best way to keep your Bitcoin is in a multi-sig that you control, and you have something like, 2 out of 3 or maybe 3 out of 5. So you got like 5 addresses or 5 signatures, and all you need is 3 of them to complete any transaction on that multi-sig wallet. But you're the one that keeps them. Maybe you've got like a couple that you give, one to your lawyer, one to your accountant. The 2 of them can't collude because they don't have enough signatures on a 3 of 5. If it's a 2 of 3, then you just give your lawyer 1, you keep 1, or 2 or whatever, and you keep them in geographically distinct locations. That's really the best way. All right. That really is like the pinnacle of the security model for Bitcoin. But the second that you start, quote unquote, using a third party to loan out your Bitcoin, or even just a direct loan, because they've got to use the Bitcoin. That's why you're loaning it out. The person that wants that loan is going to use that Bitcoin, and it's a promise that they're going to pay you back all of that Bitcoin plus interest. So just be aware. Don't get greedy, especially right now when all the markets are in flux. Here in a couple of hours, we should know what the Federal Reserve is going to do. I suspect that they're just going to keep rates the same. But everybody's in a holding pattern until, Jerome Powell actually says the word. So the markets are in flux. Make sure you keep your Bitcoin safe, and make sure that if you are thinking about loaning out your Bitcoin, especially in a third-party situation like what I just described, you vet the living shit out of that thing. And even then, it's no guarantee. So please, for the love of God, be careful. Strive clears similar debt off the books. Buys more Bitcoin after $225 million of preferred stock is sold. This is James Van Straten writing for CoinDesk. Excuse me. Bitcoin treasury company Strive, ASST. Oh my God, this is just such a horrible ticker. And when most of your ticker is ass, yeah, okay. So well, anyway, Bitcoin treasury company Strive now has less debt and more Bitcoin on its books after raising $225 million via an offering of its SATA preferred stock, with more than $600 million in orders. According to a press release, the offering was upsized from its initial target of $150 million. And I told you about that Strive was actually going to be offering this I want to say it was Friday last week. Well, apparently it was so oversubscribed that they had to add another $125 million to it, or whatever it was. Anyway, the proceeds and exchanges enabled Strive to rapidly reduce leverage following its acquisition of Similar Scientific. The company retired $110 million of the $120 million worth of legacy Similar debt, including $90 million of the convertible notes exchanged into SATA stock and the full repayment of a $20 million Coinbase credit loan. As a result, 100% of Strive's Bitcoin holdings are now unencumbered. with plans to retire the remaining $10 million worth of debt by April of this year, ahead of its original 12-month timeline. Strive also used some of the funds to acquire an additional 333.89 Bitcoin at an average price of $89,851, bringing total holdings to 13,131 BTC. That is a full palindrome number. 13131 is read the same forwards and backwards. Anyway, making it the 10th largest public corporate holder globally. The holdings are now worth more than $1.1 billion at Bitcoin's current price of $89,100. ASST shares remain under pressure, down 1.5% early Wednesday to 81 cents per share. So Strive clearing similar debt in the acquisition of similar in a completely oversubscribed offering. You know, it's actually surprising to me, considering how much pressure is on Bitcoin treasury companies, that Strive had oversubscription on this offering. I don't know if that's good news or bad news, but whatever. Let's run the numbers. CNBC futures and commodities. Brent North Sea is up 0.4% today to $67.84 a barrel. West Texas Intermediate is up 0.6% to $62.77. Haven't seen that price in a while. Natural gas being the hedge, 0.78% to the downside at $6.09 per 1,000 cubic feet. Gasoline is up 0.8 to $1.88 a gallon. Palladium and the rest of the shiny metal rocks are doing very, 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 very well today. 8.21% to the upside for palladium. Gold logging another all-time high, 4.17%, brings it to $5,297.50. Platinum is up 3.5%. Silver up to $113 an ounce after a 6.65% gain, and copper is up a point. Ag is fully mixed today. Biggest loser is chocolate, losing all of the gains it's made this week. Back down you go, you little son of a bitch, after a 6.29% decline to the downside. Biggest winner today is wheat, 2.5% to the upside. Live cattle up a third, but lean hogs are down 2 points. Feeder cattle up 0.75 points. Indices, I don't know if we're still waiting on the Fed or not, but S&P is moving sideways. NASDAQ is up a third. Dow is moving sideways, and the S&P Mini is down 0.1 point. Let's see here. Where are we? Oh, $89,780 is what you're going to get on one Bitcoin. That brings it to a $1.79 trillion market cap. We can only get 16.7 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,981,369.91 of. Average fees per block remain the same, 0.02 BTC taken in fees on a per block basis. There looks to be about 22 blocks carrying 52,000 unconfirmed transactions waiting to clear at high priority rates of 4 sats per VByte. Low priorities get you in at 0.9. We have had a massive drop in hash rate, which is all due to the winter storm. However, we are still clocking in at 883 exahashes per second, which is more than enough security for the Bitcoin network. It is estimated we're going to have a difficulty adjustment, and it's estimated to be 17.89% to the downside. That is like one of the top 5 downward difficulty adjustments that I've ever seen. That's a big number. But again, that winter storm was nothing to sneeze at. Get it? See what I did there? Okay. Salacious social slop. Yesterday's episode of Bitcoin and I got nostr gang with a short row of sticks. Says Forest Walker doubling as Nunya AI. Find it in the woods. Have extraordinary conversations. Dude, that'd be kind of terrifying. Permanerd with 210 says, too many turds in the sandbox. Tulips with 1,000 sats says, as always, thank you for your service, sir. It is good to know I am not the only one enraged and righteously indignated crazy out there. I DCA'd silver for 3 years when I was a student in 2011 at $48 per ounce and sold it for the down payment of my house in shithole country. Number 2 on 2019, $20 an ounce is what he sold it for, losing almost 50% on that trade that went nowhere for 15 years. The pain and misery I went through to sell my silver coins was maddening. It turns out that silver rusts and you cannot sell it. I bought it like that and couldn't sell it back to the bank that sold it to me in the first place. Fucking joke. Now, imagine going on vacation, wondering if your box full of coins is going to be there when you get back. You do not choose when to sell it because it is money and you use it when you need it, unless you are rich AF. But silver is just tulips and like everything else is going to zero. P.S. Silver bugs are the real low time preference OGs. Yeah, no shit, dude. Nick Dose with 138 says cheers. Cheers right back to you. That's the weather report. Welcome to part 2 of the news that you can use. Pinterest to slash nearly 15% of its workforce in AI-powered restructuring. Vismaya V from Decrypt. Pinterest announced it is slashing its workforce by nearly 15% as the social media company pivots resources towards artificial intelligence, the latest tech giant to change its operations around artificial intelligence capabilities while reducing headcount and triggering concerns about massive job displacement. The San Francisco-based firm disclosed the board-approved restructuring plan in a Form 8K filing with the SEC on Tuesday, announcing it will eliminate positions affecting fewer than 15% of employees, along with office space reductions. Pinterest said that it is, quote, reallocating resources to AI-focused roles and teams that drive AI adoption and execution, prioritizing AI-powered products and capabilities, and accelerating the transformation of its sales and go-to-market approach. Woo! The company is the latest firm to realign its workforce around AI amid ongoing uncertainty over the technology's long-term impact on employment. The restructuring is expected to be completed at the end of its third fiscal quarter, subject to local law and consultation requirements. The move will trigger restructuring changes or charges between $35 million and $45 million, primarily in cash-related expenditures. Despite reducing overall staffing, the company plans to reinvest in, quote, key development areas and strategic opportunities, according to the filing. Well, the announcement arrives amid mounting warnings from AI industry leaders about rapid workforce displacement. Earlier this month at the World Economic Forum in Davos, Anthropic CEO Dario Amodei reaffirmed predictions that human-level AI could arrive by 2026 or 2027, while estimating that up to half of entry-level professional roles could vanish within 5 years. Quote, we might be 6 to 12 months away from when the model is going or doing most, maybe all, of what software engineers do end to end. I don't think so. I call bullshit. Robinhood CEO Vlad Tenev noted during a recent TED Talk that AI could drive a Cambrian explosion of innovation and job creation, predicting a, quote, job singularity with new job families across every field. Quote, where the internet gave people worldwide reach, AI gives them world-class staff, Tenev said. Pinterest joins Meta Platforms, which cut about 1,000 jobs from its Reality Labs division this month, as it itself shifts resources from metaverse development toward AI wearables and mobile features. Quote, 6.1% of jobs will be lost in the United States by 2030 due to AI and automation. J.P. Gounder, VP Principal Analyst at global research and advisory firm Forrester, recently predicted, quote, even if we're not heading for an imminent AI job apocalypse, Gounder said, organizations will, or use of AI will alter work and customer service, but in the next 5 years, the future of work will remain largely human as AI takes over tasks without fully replacing jobs. Meanwhile, AI's role in hiring itself is facing legal scrutiny. Last week, 2 job seekers filed a federal class action lawsuit against AI hiring platform Eightfold, alleging the company uses hidden artificial intelligence to secretly score applicants without their knowledge nor consent in violation of consumer protection laws. That's going to be an interesting case trial to follow. But I find it odd that there's only 2 job seekers and it is a class action lawsuit. Technically, if there's more than one person, I can see it, but only 2? I don't know. Maybe these are just the lead plaintiffs in the case and there's several hundred more behind it. But I expect that to be a trend. I really do. Now, here's the thing. The big question for me, and always has been, is if all these jobs are taken by artificial intelligence, especially like, more, what they called thought positions or thinking style jobs, if all those are taken by AI, and automation really comes up because AI is going to really help people build better robots, better automation systems. I guarantee it. The question becomes, how does any company make any money if everybody's unemployed? Not any company, not all companies, and not everyone being unemployed. But you see where I'm going with this. It does not mean that there won't be new job and new job classes and, like they say in this article, new job, quote, families, right, that will be created. But there will be a time in which companies will start seeing the fact that they're not selling anything because nobody has any money, or enough people don't have any money because they all got displaced by AI. And then everybody's sitting there kind of wondering together, what the hell happened? I'm trying to think of what kinds of new jobs would be created that artificial intelligence won't subjugate later on in the future itself. I don't know what those jobs look like. And it's probably just because of I'm running on fumes. I got 3 brain cells left to me after, years of living it up. All right. So maybe it's just a lack of imagination. But what I would like is any listeners out there, if you have an idea of what these new jobs that will be created by AI that humans will fill, if you can tell me what those jobs might be in, what industries, and what they might look like, I'd appreciate knowing, because I'm really interested in what this looks like. Because one thing is for sure, there is going to be a certain amount of years where there's going to be enough unemployment because of AI that actually pulls the rug out of the businesses that installed that AI and got rid of their people, that they can't make enough money and then they got to fold. Because the people that got displaced from their jobs, they're going to be worried about making food or, paying for food, not paying for shoes that were designed by AI, and you got rid of the guy designing shoes, and now the guy designing shoes only wants to buy food and doesn't want to buy shoes. You see, that's sort of the way that it's sort of like a negative reinforcement loop. It's awful. It really is. But it's not going away. So we have to figure our way around it. Anyway, let's get on to this one. U.S. government investigating alleged $40 million crypto theft by a federal contractor's son. The son did it. Bitcoin Magazine, Micah Zimmerman is writing this one. Members of the U.S. government are investigating allegations that tens of millions of dollars in cryptocurrency seized by law enforcement were stolen through insider access via a federal contractor, according to public statements. The U.S. Marshals Service confirmed to CoinDesk that it is investigating claims that more than $40 million in confiscated digital assets were siphoned from government-linked wallets. I'm pausing to say this reminds me of the South Korean story and their government getting fished for something like, I don't know, a couple of $1 billion. I brought that to you last week, I believe. It smells similar. Anyway, the allegations center on Command Services and Support, a Virginia-based technology firm contracted by the USMS to manage and dispose of certain categories of seized cryptocurrency. Blockchain investigator Zach XBT alleged that John, quote, Lick Dagita, his nickname is Lick. Come on, man. John Lick Dagita, the son of CMDSS president and chief executive Dean Dagita, gained unauthorized access to crypto wallets holding government-seized digital assets and diverted funds for personal use. Zach XBT said he reported the alleged activity to authorities and linked multiple wallet addresses to assets controlled by or associated with the United States Marshals Service. Brady McCarran, Chief of Public Affairs for the USMS, told CoinDesk that the agency could not comment further on the case because investigations were underway. The allegations first surfaced after a dispute in a private Telegram chat was recorded and later circulated online. According to Zach XBT, the individual identified as Lick appeared to screen share a wallet holding millions of dollars in cryptocurrency and demonstrated the ability to move funds in real time. Subsequent on-chain analysis linked those wallets to addresses known to hold government-seized assets, including funds associated with high-profile law enforcement seizures. Quote, meet the threat actor, John Lick, who was caught flexing $23 million in a wallet address directly tied to a $90 million plus in suspected thefts from the U.S. government in 2024 and multiple other unidentified victims from November 2025 to December 2025, Zach XBT wrote on X over the weekend. Zach XBT then later identified the individual as John Dagita, alleging that he is the son of CMDSS's president and that CMDSS currently holds an active federal IT contract. CMDSS was awarded a contract in October of 2024 to assist the Marshal Service in managing and disposing of seized and forfeited digital assets, including crypto that is not supported by major exchanges and assets tied to complex criminal cases. These crypto assets reportedly include funds seized from the 2016 Bitfinex hack, one of the largest cryptocurrency thefts on record. Zach XBT has said it remains unclear how John Dagita allegedly obtained access to those wallets, including whether that access was facilitated through his father or CMDSS's internal systems. According to Zach XBT, one wallet he attributed to Dagita held 12,540 Ether, worth roughly $36 million at recent prices. He also alleged that Dagita sent him 0.67 ETH, which the investigator said he would forward to a U.S. government seizure address. Hold on, I'm pausing. So Zach XBT alleges that this particular individual, John Dagita, sent him, the investigator, Zach XBT, 2/3 of 1 Ether. That involves Zach XBT directly into this investigation. And I'm thinking that Zach did that to say, okay, prove it. Send me some ether to this particular address and then show me blah, you get my drift. Maybe Zach was sitting there going, you got to prove that you have access and the ability to move these funds. Well, the problem, Zach, is that now you're involved in this investigation. You are actually part of a federal investigation at this time because you have told everybody you received and probably proved it on Telegram or wherever that you received these funds. These funds that were allegedly stolen by John DeGita from the United States Marshal Service. Congratulations, sir. Have fun with your federal investigation. And it's not that I don't have a problem with Zach XBT. Don't do this is what I'm trying to say. Don't do this. If you think somebody is involved with theft of United States government property, for the love of God, don't ask them to prove it by sending you some of that stolen property, because now you're part of the issue. Zach XBT is now in the mix. He's not a bystander any longer. He's not from the outside looking in. He is fully on the inside looking in. Don't do this, okay? Please be smart about this stuff, people. But Zach XBT further claimed that transaction trails suggest approximately $20 million was removed from Marshal Service linked wallets in October of 2024, most of which was returned within a day, though roughly $700,000 worth routed through instant exchanges were not recovered. In additional post, Zach XBT estimated that total suspected thefts could exceed $90 million in various crypto when accounting for other wallet activity observed in late 2025, some of which he said remains in compromised wallets. The allegations have raised valid concerns over just how the U.S. government safeguards its growing stockpile of seized Bitcoin and other digital assets. The federal government may control between 198,000 to more than 300,000 BTC, worth tens of billions of dollars at current market prices. According to BitcoinTreasuries.net, the U.S. government holds approximately 328,000 Bitcoin, worth roughly $29 billion. The controversy comes amid heightened security of how seized Bitcoin is handled, following reports earlier this year questioning whether forfeited assets tied to the Samurai wallet case were improperly sold, despite executive orders directing that seized Bitcoin to be retained as part of the U.S. Strategic Bitcoin Reserve. While U.S. officials later denied that any sale took place, the lack of on-chain evidence provided publicly has continued to fuel skepticism. Wow, so there we go. And then, okay, Zach XBT, in this report here, there is a picture of this John Lick, and he looks to be anywhere between 16 and 19 years old. It's got pictures of this guy. So, wow, okay. This guy looks like he's in high school. All right, so this may answer the question of where is the 53.57 Bitcoin from the Samurai wallet that I keep asking. This may be what's going on here. Who knows? But the bigger question isn't just the Samurai Bitcoin, it's the Strategic Bitcoin Reserve. Now, technically, I don't think the Marshal Service is supposed to have anything to do with custody of the Strategic Bitcoin Reserve, but I don't know if those private keys have been handed over yet. I know that the Marshal Service used to be in custody of what would become the Strategic Bitcoin Reserve Bitcoin, but they are not supposed to have any custody of it whatsoever right now. What they will end up having custody of is interim seized cryptocurrency before it can be handed over to whoever the true custodian for the United States government is. And this story appears to only be affecting the U.S. Marshals Service. But there's still a further question. If the U.S. Marshals Service is incompetent in hiring third-party contractors to do their work and then vet them properly, and I guess they have to vet their family members too in this case, then how sure are we that any Bitcoin in the strategic Bitcoin reserve, even outside of the purview of the United States Marshal Service, how safe is it? And the question is, we don't know. Or the answer is, we don't know. We just don't. This is a bad situation for the United States government. It's going to look really bad for Trump if any of the strategic Bitcoin reserve is actually comes to either be, we either come to find out that some of the Bitcoin in the strategic Bitcoin reserve has already been compromised, which means the entire reserve is now compromised, or it hasn't. If it has, that does not look good for Trump. If it hasn't, the question, is it a if not, is it a when not if situation? That's not going to look good either. That's a bad deal, man. Just a bad deal. And finally, up for today, DDC strengthens Bitcoin treasury with an additional 100 Bitcoin. This is actually out of Dow Jones Newswires, by the way. DDC Enterprise Limited, a global Asian food platform and digital asset treasury company, today announced the acquisition of 100 Bitcoin, increasing its total holdings to 1,683 Bitcoin under its structured Bitcoin accumulation program. The press release features multimedia, and you can see the full press release here, and then they give a link. DDC announced the acquisition of 100 BTC, and it marks the company's third Bitcoin purchase of this year. They've already bought Bitcoin 3 times this year, and it reflects its continued commitment to a disciplined approach of treasury management. DDC's strategy integrates digital assets as a component of long-term balance sheet resilience and value creation. The purchase highlights are: 1, treasury growth, increase Bitcoin treasury holdings by 100 BTC. It's a BTC milestone because their total holdings are sitting at 1,683 Bitcoin. The average cost per Bitcoin is $88,130. Congratulations. As of this moment, you're in the green. Bitcoin yield is 42.3% year to date. And the Bitcoin per share is 0.056 BTC per 1,000 DDC shares. Quote, our approach to Bitcoin accumulation remains measured and intentional, said Norma Chu, the founder, chairwoman, and chief executive officer of DDC. Quote, this latest purchase reflects our conviction-driven strategy and our commitment to deploying capital responsibly. We continue to prioritize strong governance, disciplined execution, and long-term value creation for our shareholders, end quote. As far as suit speak is concerned, I've read worse. Anyway, DDC has established a dedicated governance and oversight framework to support its Bitcoin treasury strategy, including internal controls, advisory support, and ongoing risk monitoring. The company expects to continue advancing its treasury strategy in a manner consistent with those principles. DDC Enterprise Limited is participating proactively in the corporate Bitcoin treasury evolution while maintaining its foundation as a leading global Asian food platform. The company has strategically positioned Bitcoin as a core reserve asset while continuing to expand its portfolio for culinary brands. DDC is at the forefront of public companies integrating Bitcoin into their financial architecture, and then they, for more information, you can go to ddc.xyz. So an Asian food platform. So I guess they curate vendors and find purveyors of Asian food stuffs so that maybe chefs and retail around the world can order whatever it is in Asian food that they actually need. That seems to be what this platform is. And even those guys are stacking Bitcoin. And I've never heard of DDC before. They've bought Bitcoin 3 times this year, which means this month, which means in the first 28 days of this month, this company has stacked 3 times. Kind of impressive. What do they know that nobody else knows at $89,428 a Bitcoin? So there it is. There is 1245 in the bag. Today's show of Bitcoin And with me, your host, David Bennett. I am glad that you came along for the ride, and I will see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.